All right, you guys, as we talked about stock futures, we talked about your 6 month investment plan. The next topic that we need to address is the unemployment rate and why your attention to the unemployment rate is a key part of your investing knowledge. Okay. Just want to put some hard numbers to this conversation. Our January unemployment rate is 4.0. Okay, that's basically 4%. If you want to know, the African American unemployment rate is normally always double this number. Okay, so we're at 4% of an unemployment rate, and there was a increase of non-farm. Basically, the index is it's broken down into sectors, and why this is important is because as you're formulating your idea about a 6 month investment plan and about where to invest, you may want to know where the people are working and where the people are not working. Now, a 4% unemployment rate is not that bad. It's not bad at all. It's been a lot higher in our lifetime, so it's not that bad. A lot of people are working. Now, a lot of people are working. This is America. Our religion is work. That's one thing Americans do more and better than anyone else. We work. Okay, so we work. Now, January actually was not a good month at all, meaning they only increased 143,000 jobs this month. Okay, and that's up against December was 307,000. So we've increased half that amount. January is actually a really tough month, and that's also why you might hear a conversation, a lot of people saying, oh, these jobs are hiring, but they're not calling me back. I'm not getting interviews because they're not really hiring. Okay, this is the actual hardcore numbers. December was a way better month for you to have tried to get a job. Now, some of the major sectors that took a hit in January was restaurants. Restaurants and bar service declined largely. And the jobs that there was actually no change to the healthcare sector. And the government jobs, there was actually no change there. Social assistance, it said, rose by 22,000 jobs. Government increased by 32,000 jobs. And like I said, the major hit was in restaurant and leisure. Okay, so, and this article is from Reuters, and they're noting the California wildfires as a major reason for that decline in, we'll say, hospitality type of jobs. Okay, but what this does is it helps you frame an idea. Remember, we talked about the sectors. Okay, so let's say if I'm interested in purchasing a stock in healthcare, right? I'm going to want to know that this month and last month, the healthcare sector has not been really affected by the up and down in unemployment, right? That's something to note. Like I already said, that healthcare is a valuable stock and a valuable thing to put your portfolio in. Put some stocks into your portfolio. That stands true, okay? But inversely, if I was thinking about maybe some consumer discretionary, maybe some travel type of stocks, I may want to think twice, as there is a decrease in the jobs for restaurants and hospitality. You see how you need to make that mental correlation, and it helps you formulate your opinion. Actually, January 2025 has been the lowest. Well, it's not the lowest at all, but it is pretty low. It's half the size of December. November was a little less. October was a very low month, meaning barely anyone got a job in October. October was actually the lowest month of the year in terms of job growth. Okay, so this is easy information to find, but this is your unemployment rate, and this is as you're formulating your 6 month plan to invest. This is going to help you put a box around what sector at least you should maybe be investing in, because some of your investments need to be investments that you're familiar with right here in your everyday that you can touch, and some of your investments are going to have to draw from your knowledge and experience of the current economy. Okay, So, like we all know, the tariffs have made things a little shaky, and that definitely is having an effect on the employment market or the unemployment market, as there are a lot of manufacturers in professional services and business services and transportation. They are predicting a decline. Their prediction of decline is from 55% from 57% to 55%, 2% decline, right? So it's good to get some real numbers to this information. Like I noted in my last video, when the news tells you that the hair is on fire, the actual numbers are, okay, they went down about 2% because of these tariffs. So we'll definitely check this next month. By the end of February, beginning of March, we should get another report. And then we can kind of start to gauge where things are really at, okay? Just so you know, back to the Feds, right? The Feds, their last meeting, they did a benchmark overnight unchanged at 4.25%. So they basically said, we're not going to change it. We're going to leave it. We're going to leave it alone. Which is, like I said, that's their discretion. That's their job. That's where the interest rate is. And rather have them leave it alone than to increase it. Okay? So that is some information for you about the unemployment rate and how understanding the unemployment rate here in America on a month-to-month basis drives you to be able to select stocks in sectors that are actually growing, right? And not from what you think, but where the hard numbers in the actual research is, okay? Feel free to ask any questions about that. Also, in the sections in the collections on my videos, I'm grouping them together by weeks, and I will add this there. Additionally, the book, The Intelligent Investor by Benjamin Graham, and The Richest Man in Babylon are in my showcase for sale there, if you guys want to start picking those up and start to expand your knowledge. Next week, when we come back, we are going to get back around into some mutual funds. We're going to talk about some sector EFTs and some specialized funds to consider. And we are going to dive back into a bull and bear market with your 6-month plan in mind. Okay? Have a great weekend.